Price is king, it's where we belong. Stay with the dream, don't lose your way. Right way's the fire that'll light the day. Keep it simple, let the moment arrive. 3-8 trap keeps the hope alive. Hold on tight till the signal's near. Right way's the trail, we're breaking through fear.
Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for December 3rd, 2025. Well, happy hump day, everyone. Hope everyone is ready for another wild day in the market. Quite the volatility yesterday with some pretty big intraday whipsaws, but finished the day very, very strong. And the market is showing tremendous confidence for the upside. How about we take a look at what happened overnight here in Asian markets? We saw Australia. Australia was down. Up $15.50 last night, 0.18%. The Hong Kong fell by 334.32, down 1.28% during the night. We saw South Korea up 41.37, 1.04% higher. The Nikkei rose by 561.23, or 1.14% higher. India was lower by 46.20, or 0.18% lower, and the Shanghai fell by $19.71, or 0.51%. If we take a look at European markets this morning, Europe is mostly higher with the DAX up 52.29, or 0.22%. FTSE is lower by $18.38, or 0.19%, and the CAC is up $2.73, or 0.3% higher this morning. Looking at U.S. futures here this morning, we've got U.S. futures moving higher right now. Dow futures are up 75 points even. S&P 500 futures $12.25 higher, and Nasdaq futures up $30.25 this morning. Let's take a peek at what's going on in the bond markets here today. Bond markets are just a little bit lower here today. We started easing up on those bonds yesterday afternoon. We've got the 2-year bonds coming in at 3.49%. 10-year bonds are coming in at 4.07%, and those 30-year bonds are coming in at 4.74%. Now, as a result, you would think we would see the dollar rallying just a little bit, but that's not the case. The dollar is moving lower here this morning, and pretty sharply so, breaking support levels. Obviously, we gave up this upside trend in here. We'd been kind of clinging to a little bit of support here, trying to hold on, and now we're dropping through that here at the moment as the dollar falling 37 cents here today. Of course, a huge anticipation of a rate cut next Wednesday, and anytime you cut the rates, it devalues the dollar. So if we are going to see a rate cut, we would certainly likely see the dollar weaken. So we got that going on here today. We'll have to keep a close eye on that. Now, if we take a look at what's happening here in precious metals, gold that was down yesterday, but then rallied at the end of the day, is trying to move a little bit higher here this morning. Right now, gold futures are up $15 an ounce, $4,235 an ounce here this morning. Silver is holding up incredibly well. Silver is up 11 cents this morning at $58.81 an ounce on silver. My goodness, new record highs on silver. Copper is higher here this morning. We've got copper up almost 9 cents, just a touch over 8.5 anyway, and moving higher, and we may have that opportunity to set a new record high here in COPX. So keep an eye on that. New record high close, that is, and it really wouldn't take all that much to break through to all-time new highs here there. Let's take a look at platinum. Trying to show some bullishness. Nice bullish pattern starting to show up. Break through this resistance here in the chart, stretch up through, rest back, hold it, and that might be that next higher low here in platinum. Keep an eye on that. Up $2.60 an ounce here this morning, 0.16%. And palladium continues to struggle with this resistance here. Boy, we have tried this 1, 2, 3, 4 times so far, and we're up here again banging our head on this to see whether or not we can push that on through. Watch that closely on palladium. Cryptos had a nice recovery yesterday, really strong move back up, and they're gapping up here again this morning. We've got Bitcoin right now up 1,894.32 a coin, or 2.08%, working back up into this resistance, and perhaps we're creating this double bottom in here on IBIT. If we take a look at Ether, Ether is coming in higher by 85.56, continuing to stretch up. 2.88% here this morning, trying to push it back up toward price resistance in the chart as well. And Solana is up $2.56, or 1.84% higher here this morning. So we'll want to be keeping an eye on that. And cryptos this morning are green across the board. Let's take a look at what's going on in oil markets here this morning. We had a little bit of selling there in oil yesterday, but as you can see this morning, we're starting off on a bullish note. Oil futures are at the moment up 80 cents, 59.45 a barrel. A barrel on oil. But what I'm seeing here is that possible little higher low coming in there on USO. So watch that carefully. If we can break through this downtrend, hold a little higher low, maybe we start catching a little bit of move back to the upside in oil. We've got Brent crude coming in at 63.19 a barrel, and natural gas moving back up here this morning after just a little pullback yesterday, or gapping through yesterday's candle to the upside. Natural gas continuing to show some strength, and maybe finally showing some confidence that we can break out of this basing pattern here in natural gas. So keep an eye on that. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a look at these index charts, see if we can figure out how we might want to approach the market for today. Remember, we want to look at these charts for what they are, not for what we want them to be, and really try to shake off that bias. Well, I got to tell you, the last couple of days where we've kind of rested in this pattern in here is starting to build the diamonds into more of a bullish pattern. This big stretch up here, you're always worried in a big stretch like that, and then it reverses. We get that big stretch, and now we're resting and kind of holding in this pattern in here. That's a good sign to me. If we can hold in here and hold this support level in the chart, then I see every reason to believe we could stretch back up through that high, and we can start pushing in to test these higher levels here in the chart and breaking on back through toward that all-time high in the diamond. So watch that carefully. I do see that as a pretty good possibility, and the longer we rest here, I think the better. If we were to bounce around here for even the rest of the week, I think that would be a very good sign in a calming of the market, and then we could stretch on through to the upside. Let's take a look here though. If the bears were to come up with anything here today and act a little bit on the angry side, as long as we don't break down below here, I think we're fine. I think we can continue to bounce around in here and be just fine. But if we were to break below that, if we break that down, then I think we have those worries that we could start moving through, filling some of these gaps in the chart and retreating more back toward that 50-day moving average. So watch that carefully if we were to break down below that area of price support in the chart. If we take a look at our SPY, also, this is a very bullish rest in here at the moment. Big stretch up and then rest here for a bit. That is a really good sign, and we broke above this downtrend in here. So we're calming the market here just a little bit, and the longer we rest here, once again, I think the better. So if the bulls have anything to say today and we stretch up off of here, I think there's every reason to believe we could start pushing up, breaking through some of these areas of resistance in the chart. And we certainly know that big tech is the major driving force in the market. More stocks were going down yesterday than were going up. But that being said, big tech continues to have that power to lift the indexes all on their own. The problem with that is we don't get the breadth in the market to maybe be all that sustainable. So one has to ask the question, what happens if AI suddenly, these AI companies anyway, suddenly get sick, or we start asking questions about valuation here again, and we don't have the rest of the market supporting that move to the upside. So be kind of careful here as we continue to stretch and these valuations going higher. Buffett indicator yesterday back up 224. The high in November was 225, and we have never ever in the history of the market had valuations as high. Based on the Buffett indicator. So that's one of the reasons why Warren Buffett's got so much cash sitting on the sidelines, is concern of those valuations here in the market. So keep that in mind. Now, if we have the bears have anything in here to say, pushing back down in here once again, just like in the diamonds, as long as we hold this support in here, I don't see any problem. As a matter of fact, I would think that's healthy if we continue to just rest here just a little bit before we make that move one way or another in the market. So watch that carefully. But if the bears were to break this down through here and really break it down below that trend break here, I think we have that chance we can fill this gap, and that could be a pretty quick move then to the downside, and that would be coming back in here maybe for a retest of that 50-day. If we take a look at our QQQ, very much the same. Let's get QQQ in there. Very much the same, pushing into this resistance here in the chart, and that's a fairly substantial resistance, but we did hold slightly. We gapped down and then continued this stretch to the upside in big tech. So watch that carefully in here as we address this resistance. As long as we hold, I think, see how we built this range in here? If we hold in this range, I think we're in pretty good shape, holding above this area of support. If we were to break this out above here, then we'll start looking. If the bulls can push that through, then we'll start stretching up here, looking for these levels in the chart. See if we can begin to build that pressure to come back up here to all-time highs in the Qs, and I do think that's a possibility. If the bears were to have anything to say, once again, I think pushing back into this area wouldn't hurt us at all. In fact, I think it would be really healthy if we would wait and rest here for a little bit instead of just this all or nothing stretches in the market. We just collapse going down and then we just, you know, stretch to the upside. A little bit of rest here would be a good idea. I know no one wants to say that. They just want to go back to record highs. But if we were to break down below this area, that's where we would probably raise a little bit of concern, and then we might start coming back into other support areas here in the chart. We could hold in this area and be just fine, and that would be a test back down in here around that 50-day moving average if that were the case. And then last but not least, IWM also doing that little resting pattern in here. This was the only index, because it doesn't benefit from big tech, that ended up showing a bearish engulfing in here yesterday, pulling back into this resting pattern here. Once again, I think as long as we remain in a bit of a resting pattern in here, I think that's a real healthy sign for the market. We're still struggling to confidently break through this resistance in here in the chart. So if the bulls can get going, let's get back above up here and see if we can break back through that area in the chart, and then we can start trying to attack these highs here in IWM. A few more days of rest here would be really good for it. But if the bears were to have anything to say and we were to break down below this area, I would look for an attack of some of this price support in here, and then we might start stretching back down toward that 50-day moving average, which wouldn't be all that hard to see here in the IWM. Let's take a look at our VIX. Now, our VIX has continued to show tremendous confidence, and we've weakened here quite a bit. Still holding in there 16.5 handles on the VIX. So watch that carefully. 16.5 handles means that we can have big whipsaws and big reversals here in the market. So make sure you pay attention to that. But the good news is the bulls are seeing lots and lots of confidence, and the hope of a rate cut next week is really helping to drive the market here as well. We'll see as we start receiving some of this past data, this missing data, if that can continue to hold, because there is real concerns about jobs right now. So watch those numbers carefully. But if we can hold in here and the bulls continue to extend, hey, we might be right back down here testing this area of support in the chart. If the bears were to have anything to say here and we were to push back and test some of those modest support or resting pattern areas here, I could see how we could bounce around in here just a little bit. And that would probably be a good thing as well, is just to get that calming here in the market. Let's take a look at our T2108. Now our T20, well, let's do T2122 first. How about we do that? So T2122, if we take a look at that and we, there it is. You can see yesterday as we were stretching to the upside, we still had the majority of stocks moving lower. We were just flat to slightly lower here yesterday in T2122. So watch that carefully here. We get the impression that everything is super bullish, but that is just not the case. And we're not getting the breadth of the market that we would like to see here in these moves to the upside. So watch that carefully here. If the bulls do have good inspiration here today, well, we certainly made some room here now for them to push back up here into this bearish reversal zone. But if the bears have anything to say, we want to kind of keep in mind they've got a lot more room to work here. So it really is going to be important for those bulls to show that energy, show us that they can actually bring more stocks into this instead of just a handful of techs. So watch that carefully here on T2122. T2108, you can see yesterday it was flat to slightly lower yesterday. So as we were zooming and getting the impression that we are uber bullish in the market's not seeing that. We still holding below 50% of the stocks above their 40-day moving average, but a good push today could easily push us back up there. So if those bulls have that energy and can show us that strength, pushing through that would be a great sign here for the bulls. If the bears had anything to say, I would look for that pullback in here. We've got some decent support, so watch carefully if the bears were to have anything to say. T2107, pretty much the same thing. We were lower, not quite as flat. We were lower yesterday, so we are still struggling with the percentage of stocks above the 200 getting back above that 50%. And you know, big tech cannot change these all on their own. So we need a bit more participation in the market. Watch that carefully here. A good push today, we might be back up here and breaking through that 50% and this downtrend here in T2107. If the bears were to have anything to say, you could really see that possibility that they could slip down and start testing some of these areas of price support as well. In our T2101, this is the problem that the bulls have because we're so centric in just a handful of stocks that the breadth yesterday opened strong and then faded throughout the day as we kept moving up and stretching higher and higher. The actual breadth of the market was declining. So that is a problem here for the bulls because we're so focused in on just a very few companies. Let's take a look here. I do want to point this out that although we did have a good rally yesterday, we're still not back up to normal volume here, and maybe the holiday is finally everybody getting home. Maybe we'll see a little bit more volume coming into the market. But if we look through those indexes here, and I point that out, just relatively weak on that volume here in these indexes as we continue to stretch higher, and that is problematic. Like I said, we really need to see that breadth of the market really starting to improve to get things going here in more of a stable way instead of just centric into big tech. Let's take a look at our economic calendar here for today. We got a busier one on that economic calendar. We're going to start off here with the ADP report, and well, that's not true. We're going to start off here with the mortgage applications this morning, so keep an eye on that. We've seen those rates moving up, so this could be a little bit problematic today. Watch that carefully. Then we've got the ADP. Consensus is looking for 20,000 on the ADP, so watch carefully here. That would be a decline, and there's that little concern in there, so watch that carefully on that ADP report today. Import-export prices, I'm not sure if we're going to get these or not, and we certainly don't have any of the prior data in here to weigh against what consensus is suggesting right now. So watch that carefully today. That would be an interesting one if we get that. And of course, industrial production is another that we'll want to be watching whether or not we get that. Again, we don't have anything to compare that to because we've been missing so many of these reports. So watch that carefully here today. PMI composite, looking for that to show modest improvement on the composite index to 54.8 from 54.6, and we're looking for a modest increase as well on the services to 55.0 from 54.8. So keep an eye on that. And then ISM, the more important number out there, we're actually looking, consensus is suggesting for a modest decline to 52.1 from 52.4. Past that, we've got a petroleum status number, and we've got bond auctions here this afternoon to be paying attention to. Looking into Thursday, a little bit of action in here as well on Thursday to be planning for. Challenger job cut report, international trading goods, jobless claims, natural gas report in here. We've got some bond auctions, a little bit of Fed speak in here, and as we look forward into Thursday. Let's take a look at our economic calendar, our earnings calendar here for today. In our earnings calendar, we do have a few notables that we'll want to be paying attention to here today as we ramp up a little bit on these earnings reports. So this morning, we're going to hear from Dollar Tree. And right now, Dollar Tree, it looks like we're kind of bouncing around in there in a very bullish pattern on that Dollar Tree report, so watch that carefully here. We also hearing from Macy's this morning. We're getting a good push here. We're seeing retail doing some pretty good moves here to the upside recently, so watch that carefully. Macy's looking good. We've got Royal Bank of Canada reporting, big pop in Royal Bank of Canada, and CXM. And those are your notables here for this morning. A little pop and drop going on there, but still bullish on Sprinkler. This afternoon, for those notables, we've got a few more in here. We're going to see CRM, one of the more notables here for today, CRM. We're also going to get C3, the AI will be reporting. We've got DSGX that will be reporting. Five Below will be after the bell today. We've got GWRE reporting, HQY, NCNO, PVH, Snow will be in there, and PATH will be reporting this afternoon for those notables for today. Remember, we're ramping up to even more notable reports on Thursday. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click that bell icon when it pops up when you're notified. So you'll be notified every time I post a video. And if you find these videos to be useful or helpful, please do me that favor by clicking that thumbs up button, leaving a brief comment. That helps the channel a lot. Thank you so much to everyone who does that. Thank you for those who support the channel through the Buy Me a Coffee link just below the title of the video, and also those who share this video out on your social media feed. Thank you very, very much. Truly appreciate it. Let's take a look at a few stocks that could be setting up for today, but please keep in mind these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market because of the volatility. The whips that we're seeing here can be pretty dangerous. So let's take a look at a few things in here. First off, Bristol Myers. Bristol Myers, everything in the drug sector area of the market has just been really impressive lately. Big moves, particularly Merck. Merck would just like a rocket ship ride up there on Merck. But BMY kind of lagging behind, still trying to deal with this resistance here in the chart. But I see this as a bullish pattern in the making here. And my drawing tools just changed on me. Give me just a second here to make sure I can get that fixed. So you can see this little resting pattern in here. I would watch this resting pattern to see if that can hold in there, maybe punch through this resistance in the chart. So keep an eye on that. I'd be keeping a pretty close eye on UPS. Now, I will tell you I have a bias here on UPS because I am holding a small position in here. UPS has just been beat down. And if the consumers are as strong as we heard in the sales numbers for this holiday, boy, these guys are going to be busy here in delivering all of these packages. So watch that carefully here on UPS. We're breaking this little downtrend in here, trying to hold that higher low. So I would watch that carefully in here if that could pop. I've placed a price alert right there. You can see that pink line price alert because I was looking at this weekly chart. Boy, that is a nice little setup on a weekly pattern. pattern. So if you're looking for something in shipping, you might want to take a look at UPS. You know, FedEx has been doing quite well also in this little resting pullback the last couple of days. Could easily set up that next opportunity, that next support area for that to bounce and continue to run on FedEx. I think that's worth paying attention to. Take a look at some of these oil sector stocks. The producers, there's quite a few of them that have been doing pretty darn well. So watch that carefully here. Nice stretch here to the upside, little rest, little pullback sets up an opportunity there. Taking a look at FANG. FANG is very strong here as well. Big stretch in FANG, breaking through lots of resistance here in the chart. So any little rest or pullback in here, I think, could set up an opportunity for that to drive on higher here. You've got Occidental, Warren Buffett's favorite, that's trying to come up off of this bottom. Keep an eye on some of those. And then if you kind of switch over and take a look at some of the things here natural gas wise. EXE, big natural gas provider out there, pressing some resistance here in the chart. I would watch this area in here. It was pretty volatile yesterday in there, but perhaps we're setting a trend right in here. So watch that carefully. If we start to ease back here on this, we might see that push on higher. So keep an eye on EXE. Take a look at just UNG on its own. UNG breaking out of this bottom, that's looking good. A little rest in here, and I would look for that next opportunity for that to push on higher. And the same being true for BOIL. Take a look at BOIL. BOIL pressing through this resistance in the chart. So just this a little bit of rest in here, and I see that opportunity that could stretch on through to the upside. Keep an eye on those. I do have some concerns of some of the big banks in here, but there are a few holding up and looking pretty good. Goldman Sachs holding in here. I would keep an eye on that, trying to hold in there. I think that could stretch on through to the upside, but we are seeing some concern in some of these big banks. But BAC holding in there as well, breaking back above that support. If that can hold in here, I would look for that opportunity there for that to stretch on higher. For example, Visa to me is looking short, absolutely looking short in here. American Express possibly putting in a lower high here. So little concerns on some of those to be paying attention to and watching. You might want to keep an eye on some of those drug makers that haven't stretched out too much yet. Take a look at Pfizer. Pfizer might be coming into a setup. The reason I'm interested in it, breaking this really long-term downtrend here, breaking up through, but you'll notice we have struggled hard to get through that resistance right there. If this holds this higher low here, in here, maybe this time would be the time that we can stretch that up through and we can catch up with some of the other stocks out there. So watch that carefully. Take a look at some of the metals and mining out there. VALE has been very strong. Take a look at GDX, trying to hold this higher low in here, and with gold pushing back up today, maybe we finally break out to new highs in GDX. I think that's worth paying attention to. I would also keep an eye on some of the steel players in the market. A new core. Nice stretch up here in steel, little rest or pullback. And remember, if we're going to be building out AI and all this infrastructure that we're going to have to build out to support all this AI building, steel is going to be in high demand. So watch that carefully. Any rest pullback in here, I would be looking for new core. Steel Dynamics could be setting up in here. that's worth paying attention to. So keep an eye on some of those steel companies as well. So with that, everyone, hey, I want to wish you all a fantastic, oh, by the way, just real quick, if we look at XLY, the consumer discretionary, and XLP, the consumer staples area, we're starting to see a little bit of build into these. Now, this may just be a little bit of sneaking, I should say, where we might be seeing the big techs being deleveraged a little bit by institutions and slipping over here into some old defensive sector names. So keep an eye on that. We're seeing things like Colgate coming back around, looking pretty decent. We're seeing things like Clorox trying to come up out of a bottom, Kraft Heinz trying to hold and come up out of the bottom. Coke has been making some moves. Pulled back pretty hard yesterday, but any rest in here could be good. Keurig Dr. Pepper making some moves in here. So we're starting to see maybe the hint of a little bit of rotation. So keep an eye on some of those consumer staples, consumer cyclicals, that more defensive sector area of the market. We might be seeing some of those coming back around, and that would just be a little bit of deleveraging from the high flyers in the market, moving more into a little bit of safety and good dividend payers. So watch that carefully here as well. So with that, everyone, this video has gone long. You all take care, be safe, have a wonderful day. As always, I wish you all the very best, and I hope your day is awesome. Take care, everyone.
Black and white candles, my stars in the dark. Price is my king, got that fire and spark. Rideways my ranch on the trader's trail. Trading with heart where the profits prevail.